Welcome to the Investing with IBD podcast. It's Justin Nielsen, your host, and it is July 26, 2023. We just had a Fed day. We've got earnings, a tsunami coming. Had a few big cap techs already, and there's more to come. But before we get into that, let me welcome Irusha Peiris, who joins me every week. He's an O'Neill Global Advisors portfolio manager. How are you doing, Irusha?
I'm doing well, Justin. Yeah, you're right about the tsunami. It looks like Chipotle came out. They're down like around 7-8%. So I think that means I'd have to go to Chipotle after this and buy even more burritos to kind of help them.
See if you can prop up next quarter.
Yes, exactly.
Okay. Well, and we're going to get a little bit more into the markets and stocks and everything like that in later in the show. But before we do that, we're going to bring on one of our favorite guests, Tom Dorsey. He was the co-founder of Dorsey Wright, big name in point and figure, and he's brought along a friend of his, Tommy Walker. Welcome to both of the Toms. How you guys doing?
Great. Glad to be here.
Well, so Tom, we're going to go with Tom Dorsey and Tommy Walker, just so we can kind of distinguish between the two. But Tom, why don't you go ahead and start with a little introduction of how you met Tommy?
Well, it's a funny thing happened. I was reading the newspaper one day, and I saw this gentleman, I can't think of where he was from or what firm, that went to a penitentiary or a prison there in Los Angeles and taught a one-day course on investments, or 1 hour or whatever it was. And I thought to myself, that's a great idea, because many of these prisoners are going to be back out on the street, and they're going to be back mingling with you and your family and everyone else. What can I do to help to make them stay out of prison? And I thought to myself, well, why don't I teach a course at the state penitentiary, which is right down the street here? I mean, as you head home, we used to go right by this big, Bill Alpert called it a cross between the Wicked Witch of the West's castle and a factory.
Okay.
And when you're driving down one of the main highways going home in Richmond, everyone's going to go by that. They're going to see that. And I thought to myself, what if I taught a real course there? I said, I don't know they'll want to do that, but I sent a letter to the warden. And this is back before email or any of that type of thing. So I sent a letter, and I wasn't expecting to get anything back. But the warden sent me a letter back and said, let's go. I thought, oh, Lord, what have I gotten into?
Now you've done it.
What have I done? So the first night that we had there was the first night that we started the course. I went to meet all of the guys. Now, here I am going into penitentiary for the first time. And I mean, this is what they would call a big house. And I walked in there, and I was escorted by a guard over to
the chapel.
It was the chapel the first time. And we must have had 50 people there.
At least
50
I think
people.
They put a cap of 100 on that to begin with your class.
Yeah, they put a cap of 100. And I think the first class we had darn near 100.
Yes.
Wow.
And how many lessons were you going to be doing? How many classes were you going to be doing?
Well, I'm going to teach a class for per quarter.
Okay.
We're going to do a course and a test, a contest.
Okay.
And I'm going to teach these guys how to select stocks, how to understand options, how to manage portfolios. And then they're going to pick stocks themselves. And the one who makes the most money or loses the least money won $100.
Okay.
Number two, who came in, number two, would win 60, and number three would win 40. Well, this is a big thing in the state penitentiary when you can actually make some money. In fact, in this course, I created the first penitentiary stockbroker, because the first person that won the course was trading options, and he won the course by trading, I can't think of the name
Compact computer.
Compact computer.
Wow.
Commodore.
No, Commodore.
Commodore.
Wow, even
Commodore, yeah.
That's an
further back.
early age.
I remember the Commodore 64. That was my first computer.
And he won the course. So now all the rest of the prisoners are going to go into the next course, pay him some money to give them some ideas.
Wow.
So next thing you know is you've got
That's
a live stockbroker there who's collecting money to give ideas to the other other people who are going to be in the course that they could try to make money.
Yeah.
So a lot of interesting things happened here. I didn't know what was going to take place. In that class, I had everything from people with double murder, life with no possibility of parole, everything you can think of was in that class. And I got to know these guys, and they became friends of mine. So I think I did it for about 3 years. Started, I think, in the beginning of 1982. In fact, Jane Pauley that did I think the first show on us.
Wow.
Because once this news got out that the Associated Press picked it up, every paper in the country had it. And in my office at Week First Securities, every day crews were coming in with cameras and things like that. Next thing you know, I mean, this was like unbelievable.
Yeah.
They were coming to the state penitentiary, videoing the class, the whole thing.
Mm-hmm.
And from there, I think it's more important to listen to Tommy about what actually took place and what effect this had on many of the inmates there.
Okay.
Yeah,
Let's
so
take it away,
so
Tommy.
actually let's bring Tommy on right now. And so Tommy, what was your first reaction when you saw that Tom Dorsey was coming and he was going to teach a course?
Well, believe it or not, this was 1982. This prison was in the middle of the city here, and every day, there were people coming in from the local university, from the churches. They had a drama teacher that came in. They had writers that came in, right? Now Tom was most unusual because here he is, he was the options strategist for Weeks First Security at the time, and nothing like this had ever come into place before, right?
Mm-hmm.
And everybody wanted to go to it, and it was kind of oversubscribed. But as it moved on, it became a little bit more complex. Some people dropped out. You didn't have everybody, the educational levels weren't that great there or anything. Although Tom did a really good job of reaching people. When he's teaching options, he taught us how to do point and figure. He came in and had the old projector up on the screen, and
the overheads.
Overheads.
Yes.
Yeah. And taught us the point and figure charting, and that sort of made sense to me. That sort of caught my attention, and really from that point on, I was a technical analyst. You know what I'm saying?
Yeah.
So, yeah. I had accounting back. I'd gone to college with William & Mary. I had an accounting background and stuff like that. I had run businesses and stuff, so I had my educational level was a little bit more advanced than some of the people. Although we had some other college graduates and stuff in the program. But it really resonated with me simply because in those places, all you have is time.
Yeah.
Right. And especially back then, right? There were no telephones in these prisons back then. There were no, the TV was very limited. So you were really cut off from the outside. Papers were like at a premium there, If you get a hold of a daily newspaper, it was something else. I started getting the Wall Street Journal every day, and it kept us engaged with what was going on in the outside. It really did. And you didn't necessarily regress. And you learned things you didn't know about, new businesses, new whatever, And that was what was great about it is Tom really, it was an enriching process, And I'll never forget, he's teaching us about options, and he's teaching us, we're talking about the bell curve, right? And there weren't very many people that had any kind of mathematical background. Now, I'll never forget this guy who worked at the school. Tom passed out a bell curve, right? And he didn't really know what it was, so he came to me because he knew I had a little bit of mathematical background. I had some statistics. I explained, and he was just fascinated by this, and he just opened his eyes like a light bulb went off. Boom. You used to see things like that all the time. Mm-hmm. Tom would bring stacks of computer printouts in there, and give them to me to pour over to do like options quotes and stuff like that. Remember? Because I have hours and hours a day with nothing to do, and you just go through that stuff.
Wow.
Here I am charting 300, 400, 500 stocks by hand every day from the Wall Street Journal, right?
Wow.
Yeah.
Mm-hmm.
And I'll tell you another thing, and it became addictive, 2 3 hours a night, the nightly business report is 6:30, and then the rest of the night charting stocks,
Mm-hmm.
Investors Business Daily. What a trove of data that was. The first time and there was a group of us in these places that were all interested in that. We would share papers and whatnot. The IBD was a hot thing, right? With all the the relative strength measures, and just everything on there was absolutely phenomenal. And most of us, most people don't have the technical bent. I did, and a couple other people were really good, became technicians and good chartists. And I think that the reason we had to chart by hand and everything, I think that made us more in touch with the market.
Right.
We felt a rhythm. It made me a better analyst. It made me really understand. You could feel the trends and stuff. So everything was enriching there with Tom. And he continued to come in. He went into several institutions, believe it or not. And he was real popular. He gives a really. You guys know him, right?
Yes, we know.
He puts on a show, man. He brought a lot of interesting people and very accomplished people. So it was a really good program.
Mm-hmm. And what was the appeal? Besides something to pass the time, that connection to the outside world.
Money.
Money. Okay. Yeah.
Yeah, there you
go.
Pardon me? How many years many people had?
Oh, there was. At the time, I had a 36-year sentence, which sounds pretty terrible, but in reality, you could get so much off your sentence back then with good time and stuff. And they paroled people with a fraction of time. But we had people there are people in Tom's first class in '82 that are still incarcerated. Okay, they were still inside.
Right.
They had life sentences. Even though they were parole eligible, they've never made it because they were serious cases. I can think of at least two that I off the top of my head. But and everybody in that penitentiary had at least 20 years. That used to be the minimum to even be put there unless you had some other kind of an issue. And if you had those kind of issues, if you're some kind of security risk, weren't going to get near somebody from the outside. Mm-hmm. And look, Tom used to, after that first class, they reduced the size of the classes. They moved them to the school, which was further deeper inside the penitentiary. So every week, Tom used to come in on Thursdays, I believe, at first. That was his day, Thursday. So he would walk from the front gate all the way up the walk through an archway, which was the original penitentiary designed by Thomas Jefferson in 1800. When he was coming in there, it was the oldest prison in the country still being used as a prison. It was the second oldest prison in the country, only behind the Walnut Street Jail in Philadelphia. Had been built, right? So he came all the way to the end of the prison, and then walked up 4 flights of steps, right, by himself. Okay.
They never escorted me.
Oh, no way.
Literally classmates would meet me.
Somebody would meet him. One of the guys would meet him. Yeah. Mm-hmm.
Would meet me up front, and we'd walk to the back. But it was a long walk, and you had to walk through the yard.
The whole, yeah.
And
this, look, everybody was out roaming. Everybody was out roaming. They were all out moving around. It's like a little city. People were going to work maybe because some people work nights. They had programs at night. The school where Tom was giving his class, there were other people. There were other classes up there. So yeah, he walked right through there every week. And everybody got to know him. They all liked him. It's really pretty amazing. It kind of opened his eyes, that everybody in there wasn't like a raving maniac,
Mm-hmm. Mm-hmm.
Yeah.
And did you have kind of a goal? Again, there was the money incentive idea behind it, but was it thinking about life on the outside and how you were going to use this?
I don't think. There were a few people that maybe wanted to apply it. I always wanted to. I wanted to apply it to being self-sufficient and being able to go out and trade for a living or whatever. That was the attraction for me. I knew that this was something I wanted to do. It hit home with me,
Mm-hmm.
And it made sense, and it was something I'd really like to do. Just like what we're doing now, we come in here and trade every day, and we have the best time,
Yeah.
We have. And every day he's coming up with something new, try some new, investment idea or technique. He's been on this AI, oh my God, it's been crazy, right?
Yeah.
We're doing stuff with this, and he wants to do sector rotations based on some kind of matrix done every month and things of this nature. And he's always creating something, and that makes it interesting. You know, it's not the same thing every day.
Yeah.
Mhm.
But you know what? When he got paroled the first time,
Yeah.
I hired him at Dorsey Wright.
Mhm.
He just wasn't
1987.
done. 1987. He just wasn't done with the crimes yet.
He just started Dorsey Wright, and
1987.
and what had happened was at the old penitentiary there had been some violence and stuff, and so they were in the process of shutting this old place down and moving everybody out of it. Right. I was transferred to another institution with I worked in a print shop, and so they transferred me there at the print shop, and I stayed in touch with Tom, you know, and I kept doing my charting and stuff like that, and I helped my mother invest some of our money and like that. And I stayed in touch with Tom, like I said, and he had started his company. And that year, he and my mother, he took my mother to a parole board interview, right? It was in, I think it was in August or September of that year. And we had arranged for him to come in and teach a one-day class at the institution I was at. So after he had the interview with the parole board member, he came in there. And so I met him at the gate, and he said, pack your stuff, you know, because the guy had signed my papers right in front of my mom and Tom.
Wow.
Signed my parole papers. And told him, we won't have him out by Thanksgiving, but he'll be out by Christmas, you know. And so I got out by Christmas, and I went by his office and hung out with him some, and I started doing some stuff on the side, and he ended up hiring me, okay? Mm-hmm. And this is the kind of thing he does, because nobody else would have done that, okay?
Absolutely.
No one. You hear what I'm saying? But he would, okay? And that's how he's been successful. He's always done things. What he cares about is getting the job done, performance, you know, substance over style.
The reason I hired him was not because I wanted to help an ex-convict or anything like that. With what he did in his cell, updating 300 and 400 stops a night by hand and staying with this and becoming, probably in my opinion, one of the best at point and figure in the country. Mm-hmm. I want that.
Yeah. Yeah. It's valuable. Yeah.
So he came. Yeah.
Mm-hmm. So Tom, let me just ask you this quick question, then we can take a quick break here. But
sure.
So during the 80s, during that contest, what were some of the stocks that you remember that you were identifying through point and figure, and through what you were learning from Tom?
Well, I can think of a couple off the top of my head. Dell Computer being one of them.
Okay. Wow.
Okay.
Yeah. That was a biggie.
Eastern Airlines.
Eastern.
Mm-hmm. I mean, and there was an iteration. All the old reliables like the Exxons and that of the world. You know, I remember Tom used to buy his kids shares of Exxon every month or whatever. What wasn't it? Coca-Cola. Okay. I thought you did Exxon. You know, just Coke.
No.
Okay. Yeah, but so things like that. Yeah. Okay. So things. Remember those? What other stock was? So long ago, guys. That was
Dell Computer. You mentioned Dell, Compaq, and stuff like that. So definitely those are.
Yeah, it was a long time ago, but and what's interesting is when we did that, we were just when he started his company, we were still doing stock charting by hand every day there. This is before the computer.
Yeah.
And we did it Dorsey Wright too. We charted by hand.
Yeah.
Right.
Before we got computers, we did 2,500 stocks a day by hand.
We split them up, and everybody would take a book and chart them, and make notes about, what was breaking out, what looked good, or what didn't look good, to put in that daily report.
Each analyst updated 500 stocks every day, and then passed the book to the next analyst.
Right.
So by the end of the week, every analyst had seen all 2,500
That's
stocks.
amazing.
Right.
And once we actually went online and we got computerization with this, I had to pull those charts away from them. They didn't want to give up updating those by hand every day.
Yeah.
Right.
It was unbelievable.
Yeah. That
See,
routine.
Is that the internet really didn't exist so much,
No.
but he was Dorsey Wright was on Bridge Data Network and Teleshare or something like that, and the big deal then was faxing. We used to fax I don't know how many reports out a night.
Yeah.
So we were doing we were always cutting edge, right? And then of course there were the bombs too, the 900 numbers. That was a great one, right?
Yeah, we had one of those.
We had one of those, and we all worked terribly hard at it. And of course, you had to have so many calls a day or it cost you $1.50, whatever it was.
Yeah, or you owed them.
You owed them.
That just
exactly.
That's right. They
And,
would give
and
you-
of course, we didn't really have, we weren't marketers or anything like that. We couldn't get it out, and it didn't last very long for us. But he tried it. That was the point. And,
Right.
We couldn't get 100 calls. Captain Lou Albano was getting 50,000. Okay. It really was. But see, Tom would try that. I mean, might have hit. and it was something new, and that's what he likes to do, right? And that was also just very. There's always a real collegial atmosphere in his companies.
Well, when we come back, we're going to talk a little bit about you getting out and what that was like and how things went from there. So stay tuned. We'll be right back. The Direction Hydrogen ETF offers exposure to the top 30 pure play hydrogen economy companies by largest market capitalization, leading the way towards net zero emissions by providing more accessible, efficient, sustainable solutions across 5 hydrogen-related subthemes. With clean hydrogen-based energy expected to grow 5 times in the next 30 years, companies building hydrogen-related businesses to generate power, heating, transportation, and more will likely thrive. Welcome back to the Investing with IBD podcast. It's Justin Nielsen here, your host, along with Irusha Peiris, who joins me every week. He's an O'Neill Global Advisors portfolio manager. And coming back to the show, we have Tom Dorsey, who's joined us a number of times, the point and figure champion, and I guess a protege of his, Tommy Walker, and talking about the time that Tom Dorsey was spending giving a class at the penitentiary, and one of those classmates was Tommy Walker. So Tommy Walker, you got out in 1987.
Right.
What was that like? Were you able to kind of use these skills that you had learned with investing?
Yes.
Yeah.
And well, yes, and really became immersed in it. It was a good, because it was a startup company just getting on its feet and starting to make some progress, right? And because we were getting a little publicity, that didn't hurt either. And it sort of took off after, I forgot who did something on us when I first got, I think it was a local television program or something. And next thing you know, Larry King's calling, and I do the Larry King show, and then we had a APUPI article go out. We
end up on the cover of a magazine.
Commodities magazine. We were doing a foreign currency newsletter at the time, a daily report on foreign currencies. Tommy was out starting to get really bigger clients, and it was, the company was progressing, right? That was great, and it was exciting. Unfortunately for me, I went back to where I grew up at, down in the Tidewater region, right? Reconnected with old people, and it just doesn't work, and I sort of just walked away. It's the biggest mistake of my life in all kinds of ways, because he had saved my life one time, right? When I got out, right? I mean, I didn't have any problems reintegrating. I'm with all these nice people all the time. They always treated me nice. I didn't have these problems that you hear about reintegrating in.
Right.
And that's mainly because of Tom, And I mean, and everybody that worked for him was really decent people, and they never left the firm. When he hired them, they never left. I mean, he had a retention rate was phenomenal, right?
Mm-hmm.
Anyway,
Right.
so I had another issue, and it was relatively minor compared to my prior things. But I was on parole, and so I got convicted. I was out 7 years. I got convicted of a drug offense in '94. I went back inside, and
you had all this time left from previous.
Yeah.
Oh, God.
And
Right. Yeah.
What happened was there was a big change in corrections then, and they went to truth in sentencing laws. They basically just shut down the parole. So I did from '94 until 2012. Okay.
Wow.
When I came out, yeah. And when I got out, I was in my 50s. I had a terrible record. I couldn't even rent an apartment, because, they don't want this, some madman that they're going to be liable for living. But anyway, I got out, and Tom he was getting ready to sell his company and whatnot. And I realized very, very quickly that I was never going to have a regular job or anything, right? And so what I did was I started selling my services to small businesses, and I helped manage some small businesses, a tattoo shop, a guy who had a pretty significant rental property, down in the Tidewater region, and I knew enough from my college education and just being immersed in business to be able to make a living, And then when the pandemic hit, I really did well because of the getting small companies paycheck protection loans and SBA grants. Our computer kid had just gotten a job with a startup company, and they needed somebody to do their finances. And so I was a temporary CFO for this company. And I couldn't take it full time because I couldn't pass the due diligence test. This is a company that was going to attract private equity and stuff like that.
Yeah.
I told them ahead of time. I said, I'll do a search. You find you a CFO. I'll restructure the company and stuff. I'm really proud of that too, because I was able to give them some really good advice, get them some PPP money too. And they're still doing pretty well. And that was an AI thing. They were
helped numerous prisons come out.
People would come. That was kind of funny because the first time I got out, everybody who got out, it came through Richmond, knocked on our office door. You know what I'm saying? Because it was a big deal that about what Tom had done.
Right.
People just didn't do that.
Yeah.
So Tom, when you went back, so you just kept following the markets, kept getting back.
I probably cranked it up a little harder, right?
Okay.
Simply because the dead time. There's just nothing to do in these places, honestly.
Yeah.
I would be every day when the mail came out. I was waiting for my newspaper. You know what I'm saying?
Right.
And there were a couple other people that were good, really good stock analysts for really good stock pickers. And I convinced Tom to come in. I was at the old folks' home by then, right? Everybody there was over 40 at least, and I convinced him to come into there to give a program because we were running sort of like what he had done, an educational program on how to select stocks and stuff. So he came in, and of course the news media followed him in, and that became a kind of a cool thing for everybody in there. They all wanted these books. He had a book. What was the book? One of your motivational books.
Keep peddling.
Exactly. It was like that was one of the most sought after books in the library, right?
Wow.
And the guys like that kind of stuff, right? And he's motivational and educational.
Yeah.
And so he came into this place, and and we used to have a small group that met every week. He would send me his technical indicator review on Thursday that Dorsey Wright published, right? And so I would I'd keep the charts for the big things like these big indicators like bullish percent, the risk indicators and all this stuff, and then pass along to other people. And then every Sunday we would have a meeting and sort of go over the market for that week, right? And some of the guys were actually trading stocks at that time, and some of them had enough money where they could actually do some real damage. Yep.
Wow.
And so, all that, and it made you feel good, and of course, everybody in the institution knew about this, especially when he comes in, and some of the, I still have connections with staff from these institutions where they moved from a defined benefit plan in the state to a 401k where the state matched. So they had all these selections to make, but they didn't really know much of anything. And so, we helped them try to get them on the right track and everything. And I still, I still have connections with some of the staff members from the time I got out in 12, And they stayed with me that long, and and that's all because of Tom, he's trying to educate people. Let's put it this way, you pay it forward, right? And you want to try to educate people, and it's not rocket science, guys, There's so much bad information out there,
Right.
And these simple things, like I said, I'm a technician. I make no bones about that,
Yeah.
And I know that a lot of people don't like that. People don't like derivatives, but if you use them properly, I think they're amazing. And I do them every day.
So what do you focus on what are you focusing on right now?
I have a trust account I manage for an elderly gentleman, a friend of mine.
Okay.
I have a couple other accounts that I help onto, some retirement accounts.
Yep.
You know, and then I'll trade for myself a little bit, and so that's what I try to do.
And the trading strategy, what are you
Well, I was going to give you some. Tom, when Tom started coming into the office after he had some health issues, and so he needs to come in every day too to do his thing. Yeah, he has to be here, right? And so when I started coming in with him, he turned me on this strategy with these closed-end funds.
Right.
The whole idea about you buy these closed-end funds at a discount, you're reaping tremendous dividends from them. They had been paid out over long periods of time. The top flight management of all these, it's like a mini hedge fund. You know what I'm saying?
Mm-hmm.
And you know, his thing was pie in the sky or pie on the table. You know,
Right.
And so the pie on the table, a lot of people need that, the dividend income and whatnot. So that a lot of the stuff I do now, I put people in these closed-end funds. We buy them at a discount. We get the really good, nice dividends on them. And then what I've done with this trust is for supplemental income, I trade options on the indexes.
Wow.
And because the trust, I'm limited in the strategies I can employ. So I'm basically buying options, which is the worst possible way to invest in derivatives, right? You know, but I'm doing okay because I'm not over leveraged. I've got the best person in the world here with me every day, and we bounce off each other, you know.
Yeah.
So yeah, and then we, like I said, he comes up with ideas. Like we created a sector rotation strategy using ETFs, right? We have 20 ETFs, 2 from each of the major industry groups, and we rotate them monthly.
Yep.
And we've done pretty well on that. And then he said, well, what if we pick the best stocks out of these ETFs? The top ETFs.
Yeah.
And, you know, we're constantly doing that and employing these new, and then doing back testing and stuff just to see if something will work, you know?
Right.
And then we're working on these closed-end funds. We're looking at them, and we're thinking about, you know, could we make an ETF out of these closed-end funds?
Yeah, with the closed-end funds, it took me a long time to come to, as a stockbroker, you're always looking for commissions.
Yeah.
And once it went to fee base, and many of clients get older, once you get into your late 50s and 60s and you're about to retire, it's time for the pie to come out of the sky.
Yeah, right. Yeah.
Pie to go on the table. So how can we set up a farm, basically, that will create a monthly income to you that sends a check a month out, and you own the stocks, you buy them at a discount. If they go to a premium, you sell them. So if I want to buy 90 cents worth, pay 90 cents for $1 worth of stock, I'm going to do that. If it goes to $1.20 for $1 worth of stock, I'm going to crop rotate. I'm going to take out wheat and put in sorghum. You know, and it's just a farm. I'm only interested in the silo. What goes into the silo comes out to you in checks every month. And that changes people's lives.
Absolutely.
Yeah. Changes people's lives, because everyone is still looking for that stock that's going to really do it. You know,
10-bagger.
10-bagger.
Yeah.
Always get a 10-bagger the other way. And that result is just like the normal distribution. The more you trade, the more you come to the middle of the bell curve. It's plain and simple.
Yeah.
That strategy really has. I've seen that. I do a couple of people that have just retired, and it gives them, you know, flexibility.
It's changed their life.
Yeah, it really has, and it's pretty amazing. And this is what's even more amazing. We sit here every day. He's got a little office building, nice little part of downtown, right? And people just come through here, and all these people that people used to work for him that now or have their own businesses. They are all just brilliant people. It's amazing how many, and I didn't really know these people, but they know a little bit about me because of Tom. So I've got to meet them, and it's been absolutely great. I mean, you know, I love coming in here every day. Yeah,
That's amazing.
And it keeps you out of trouble, man. You can't get in trouble.
Yeah.
You can't have any problems. No problem.
Yeah. Well,
but
and
it really is amazing the people who come through here and the things that they've done. You know, and it all sort of all emanates. It's all tied together.
So, I mean, you had kind of when you got out in '87, you kind of did have this support group that a lot of people don't have, and
absolutely,
and that still, you know, wasn't enough. I mean, it was
no, it wasn't enough.
Yeah.
But that wasn't their fault. That was mine.
Oh no, absolutely. But
it
I was going to ask you, like, what kind of was that your wake up call? Like, the second time around, like, oh, I blew
well,
this chance, or what was it that, or were you just older by the time you got out? I mean, it's like, hey, I'm not a young whippersnapper anymore. I got to stop doing this stuff.
Even before I had my problem, I said, I knew how this was going to end.
Yeah.
You knew how it was going to end, and it was. I remember every day I used to get up, and I would get up, and I would walk out the door, and I would be expecting blue lights to explode in my face every day. This is how I lived. This is how I lived. I'm literally looking over my shoulder all the time, every single day, because I was on the radar. I was very much on the radar, and and finally it happened. It's a loser's game. He saved my life again this time. So yeah, we're good here, and I'm saying it's again an enriching experience. The interesting people you get to meet. It's pretty cool. Got to talk to you guys.
Yeah, well, Tommy, let me just ask.
And there were a few other people that you talked to before, the esteemed interviewers that you have before you now.
So Tommy, let me ask you this: what is a memorable trading mistake that you made? Maybe early on, or something that maybe you didn't learn to cut your losses, or something like that. I'm
gonna tell you, and we have both done this, so I'm gonna rat him out on this. Okay. Okay. The thing that, and I think we have every day. We'll say this is a really interesting day. It's because something different has happened, and we've learned something really from the trading aspect. And this is something that he'd always preached, but yet, you still do it. Over leveraging, okay, I'm down for the day. I'm down a couple $100 a day. I got to get this money back. I'm going to buy 3 contracts instead of 1. And the next thing you know, you're down $600 for that. Okay, and this trading. And those are the kind of things you have to fight. Today, I traded nothing because the market was insane. The premiums were insane on the options today. I wasn't going to buy one of them,
But I traded.
He traded,
and it was a great day.
And he had a good day.
Right.
But he was doing futures too, and he was selling options. He sold a strangle. Every day we go through different strategies. You look at what kind of premiums are on your options. Is it a strangle day? Is it a day we're going to whatever. We do this every single day. And I'm systematic about it. I do it every day. I look at these things.
That's awesome.
Yeah, he's more systematic than I am.
Do you think part of that systematic part came from your time on the inside, where
yes,
you kind of had to build that?
Absolutely.
I mean, routine is part of your life for
Absolutely.
a lot of years, and you don't have a choice.
Right. And you're that's absolutely correct. It really is. And you just, it's almost, this stuff is addictive, man. Okay. These things are, people, it really does. Look, he doesn't need to trade anymore. He doesn't need to do this. Right.
Right.
But he likes to beat them. He likes to win the game, and learn new things and come up with new strategies. And you're always creating something. It's fun. It's, you're stimulated every day.
Yeah, and I'd like to see him get to a point where he can have a little business going for himself, because I don't have a company. So he comes in and trades with me. He's not working for me or anything like that. He's got a place here to trade, and we spend the day together, commiserating.
I still have enough people, where I still have some small business stuff I do work for. What I've been really, what I've been proud of is that I've, even though that I've been able to give some value added to people that maybe wouldn't have gotten it otherwise,
Yeah.
And that the pandemic relief. There's so much money sloshing around out there. There's so many people. We were talking about the restaurants that have closed in downtown here, those small independent restaurants.
Yeah.
And I'm thinking I could have got them paycheck protection. I could have got them, some really good loans. They didn't even know to apply for these things.
Right.
Right.
Yeah.
And it's kind of sad because you see them go.
A lot of inmates come out too, and they have no idea what's available for the government, what they can do to get themselves started, and Tommy helps them out. And he does it pro bono.
Yeah, I do. Yeah. I do. The other thing I do is, and that's, I've had Tom, and then there's an attorney that I work with a group of attorneys that do an investigation and research for them. That was another thing I did. I sort of had to back away from that because you get too close to these cases and you get even though you're not doing anything wrong, you're there and you have a past, and these people look at you and they say something's not right here. You just don't want to be there, you know?
Right. Yeah.
And so I've sort of backed off of that. But there's an attorney I work for, and we've been very successful working together. And his thing was helping the veterans. And so I try to do I do disability claims for veterans, and I do it for free. You know,
Wow.
I've been in front of administrative law judges 7 times now. You know, and I've won the cases, and it makes you feel these people deserve what this is something they deserve, and they're not getting it because of bureaucracy or whatever. You know? And then and Tom, he thinks that's great. He encourages that. I've been trying to get into the prison system to do they have a transition out program and just do a 1-day seminar on investing for the guys, and I think that's still coming to fruition finally. It's much harder to get into these places now than when he did.
Okay. Right.
They're all out in the country and everything, and and they're not really receptive to people coming in there, right?
Yeah.
He was a rock star there at that old penitentiary.
He still is a rock star.
Yeah, he's a rock star here too. So. Well, hey, Tommy, I was really happy that you guys were able to come on, kind of share the story, and again, kind of give that sense of maybe hope for some people that no matter where you're starting from.
Definitely, man.
I mean,
you can do all you got to do is work hard. That's what that's it. You'll get a chance. You're going to get a chance. You just got to keep in the game, man.
Mm-hmm.
I'm retired now, but I'm still. But.
Mm-hmm. Well, and there's also that aspect of kind of learning from your mistakes, and kind
Absolutely.
of fighting those emotions, fighting those urges, and kind of turning it over.
And that's a good lesson for investors too, because
Absolutely.
you have all the same thing going on.
Absolutely.
Mm-hmm. Well, again, thank you so much, guys. Really nice chatting with you.
Hey, thanks for having us, man.
Have a good one, guys.
The Direction Hydrogen ETF offers exposure to the top 30 pure-play hydrogen economy companies by largest market capitalization, leading the way towards net zero emissions by providing more accessible, efficient, sustainable solutions across 5 hydrogen-related subthemes. With clean hydrogen-based energy expected to grow 5 times in the next 30 years, companies building hydrogen-related businesses to generate power, heating, transportation, and more will likely thrive.
Welcome back to the Investing with IBD podcast. It's Justin Nielsen here, along with Irusha Peiris, who joins me every week. He's an O'Neill Global Advisors portfolio manager. We just had a great chat with Tom Dorsey and his protege, Tommy Wright. And now
Tommy
let's
Walker.
get into Tommy Wright. Let me do that again. Yeah. We just had Tom Dorsey on, of course, the point and figure guru, and his protege, Tommy Walker. So let's get into some market action and some stocks, Arusha. Let's start with the NASDAQ Composite. Not too much of a surprise here, I guess, with the Fed announcement. In fact, as I was kind of like listening to it, I was like, wait a minute, is this a rerun? A lot of it sounded like the last Fed announcement, where it's just basically we're going to wait for data. Any surprises in your mind from this?
No, I don't think so. I think it was pretty much on par for the course. I was watching Jeffrey Gundlach, his comments afterwards, and he's like, "This, I think, is the most boring Fed announcement ever." And I kind of agree. It didn't go all over the place. They didn't say anything too out of the blue. I guess they kind of left the open, though. It was a little bit dovish, right? I would say it wasn't. They just kind of left it open that it seems like they'll do one more, but they kind of left it open, maybe not, and then probably won't do cuts until the end of the year and all this kind of stuff. So the market itself didn't react too much, which I think is a positive. But there were a number of stocks that started to act that were a little volatile today after having some great runs. But those are more after earnings, like a Microsoft and things like that.
Yeah. And looking at the NASDAQ Composite itself, I mean, in terms of the chart, the biggest thing that sticks out is that we did have some distribution last week, starting with a stall day on Wednesday, pretty heavy distribution day on Thursday, and then, mild distribution, let's say Friday. I mean, a lot of the volume increase on Friday was probably due to that NASDAQ 100 rebalance that everyone's been talking about. So you did have back-to-back distribution, but a lot of these days are kind of falling off. Some of the ones that were on there before, either because we've had so much progress or because of time. So I guess what I like right here is that it came down to 14,000 and then stopped. It's like the selling was done, and no one wanted to sell anymore. And it's that kind of tight action, I feel like, is a lot of times what Bill would call the quiet accumulation. The the institutions that are wanting to put more cash to work are just waiting on the sidelines with that and saying, okay, look, anything that comes up, we'll buy it. We'll buy it here, and it just makes it so that the stocks won't go down that much anymore.
Yeah, and it almost seems like the market is continuing to wait for a lot more of the earnings reports too, right? You mentioned the tsunami of earnings reports, and that's just beginning, and so it doesn't seem like anyone's really ready to commit one way or the other, very in a strong direction here. But the market's had a great run, and as you said, I mean, it's acting pretty well after having such a strong move here. And I think the key is to keep it very, very simple. As long as the Nasdaq's above that 21-day moving average, that's kind of our sweet spot. And so that's really kind of the level that I'm keeping an eye on, because
Yeah.
it starts to break that, then it's like, okay, maybe we might need a little bit more of a break here.
And it's been trending there for the longest, longest amount of time since 2017. Interestingly enough, the Dow Jones Industrial Average has had this, what is it, 13-day win
Yeah.
streak, and that's the longest win streak it's had since 2017. So a few points that keep on bringing us back to 2017, which was this really, really strong, powerful rally that most of its power was just in its longevity. It was one of those things that wasn't very volatile. You didn't have much, in terms of days that were up huge, but you didn't have much that was coming down hard either. It was just this slow, steady grind higher. And at the end of the day, you look back and you're like, wait, how did the market go up this much? There were none of these big days, but you didn't have the big down days either, and it just 2017 was pretty remarkable in that regard. And the Fed, this one in July. Our next one will be in September, and Powell kept on making the point that, hey, we're going to have 8 more weeks of data, and so we'll be taking it, see what the data looks like then. A lot of people are, of course, wanting the pause to happen, saying, hey, you don't want to overdo it. But again, there's going to be some more data to look at by the time that comes around. Tech, certainly, we've been talking about a lot of the tech has gotten extended. Some of that may be ready to come back in. I mean, Microsoft, after its earnings report, that's come back into the 50-day moving average line a little bit sharply. Google, or Alphabet, I should say, the parent of Google, that had a little bit of a better earnings reaction with a nice little breakout. But one of the things we talked about with David Ryan, who was on the IBD Live show on Tuesday, as he is every Tuesday, was about sector rotation. So are you broadening out a little bit, or do you still find yourself really kind of concentrated in tech right now, Irusha?
I'm still more in tech, but I'm looking to broaden out, right? So I brought it out a little bit, but I'm looking for some kind of good entries into some of these other sectors. Now there were, it's funny because a few weeks ago, especially like in some of like the oil sectors or steel and things like that, there were some stocks that were starting to set up and starting to go, and I was tempted. I probably should buy some of those. But there's that kind of, it's really hard to switch when everything's working so well.
Yeah.
And the positions that you have are working so well. So that's probably something that I need to try to figure out a good balance with, because you can kind of see that, okay, tech is starting to get a little extended here. You have these other areas that could grow, could start going. It might be good to kind of get some concentration to maybe slow down the volatility in the portfolio. But so it's not necessarily a surprise at some of these other areas, but so I'm looking, but I'm not necessarily, I want to wait for the more of a better setup, I guess.
Yeah, that is one of the toughest things. I mean, let's say you're up 20% on a stock. That's all fine and good, but then you start thinking, well, gosh, if it goes up, another 1%, 2%, 5%, 10%, it starts compounding on itself, and
Right.
that's where it gets real interesting. Where plus, a lot of times, once you get maybe 20%, 50% gains in your stocks, you've just by the nature of capital appreciation a lot of times got more money in those stocks now. And so when they move up more, it's real enticing because you start looking at the money you're making, and it's sometimes very easy to get greedy with that. But let's go ahead and look at some other sectors, and maybe we can look at one of the earnings movers today, Boeing. Ticker symbol BA. This was just kind of going flat forever. It seemed like for this entire year. It just seemed like it kept on banging its head right around 221, 223, and couldn't quite cross above it, and hugging the 50-day moving average line. And then you had a nice earnings move today. So with an earnings gap like this, up 8.7%, is it too late, or do you start looking at getting a little piece early? How do you handle the earnings gaps, Arusha?
Well, it really I think it all comes down to how your conviction in the stock, right? So I treat that a little differently depending on how much I want the stock. And for those kind of rare cases where I think they could be one of the leaders in the market, then I'm going to be a little bit more aggressive. And even if it's up, it has a gap up like today, and 4% away from the pivot, today I would have bought some to get at least a little bit of position. But for most stocks, like a Boeing, which is obviously a great company, and could be beginning the start of a decent move here, it's more like, okay, let me put on the watch list. Let's let it pull back and settle down. But even if you were buying this, if you really wanted to get into this, it's 4% away from the pivot. It is a breakout, so you're not buying super extended. So it is definitely buyable at this point. A lot of volume came into this. You can
Yeah.
see just on that chart right there. It's just there's your skyscraper way above all of the other volume bars, 378% volume. And so the way I look at it is this is where it should work. This is where Boeing should be able to go on a little bit of a decent move here, maybe a 15 or 20% move before building another base.
And it doesn't necessarily have to pull back. Even just flat action
Yes.
could see a consolidation of those gains, and holding up there would be good. Now, with some of these stocks that are in these other industries, earnings might not be there, especially with some of the cyclical plays. With turnarounds, I mean, because again, look, we've got 2023 still looking at losses for Boeing, but you look at 2024 and, a big estimate there. Oh, there we go. Okay. So yeah, big estimate for 2024. So how much, how much do you weigh the future estimates, in terms of stocks, in terms of believing in a turnaround?
I mean, I take into consideration, and especially for growthier type of stocks. I mean, it makes sense here. I mean, at least you're seeing some big. There's a lot of expectations for the stock in 2024, but a lot of times you're not necessarily looking at one stock in a vacuum.
Yeah.
It's a relative basis here, right? You're trying to find the very best stocks, and so when you see how a lot of other stocks have been acting and doing, Boeing might not be as super high on the list, but now this might be one of the beneficiaries of a rotation,
Yeah.
right? Where this stock might be able to do that 15% move while a number of these tech stocks build bases. So that's very, very possible. Just looking on the weekly chart here, really over the last 4 or 5 months, this has been acting pretty well, right? It's just been going sideways, getting pretty tight, and then has a strong breakout, but had a strong prior uptrend before that, breaking out of the cup. So it's your second stage base at this point. So everything, you're seeing a character change in Boeing at this point, and so it definitely has a chance to really just start the slow uptrend back to maybe 260, 300, who knows, over the next year or two, right?
Especially, because not only are they have their military components, but there's the commercial side, the planes. We saw, I mean, if you look at jets, that's been a resurgence of travel. A lot of pent up there, and jets has been going up. So yeah, it'll be interesting to see. Also, kind of in the rotation play, we've been talking about oil and gas. Now, sometimes oil and gas, as oil goes up, sometimes that puts pressure on your jets, right? Because they're
That's right.
gonna have to be paying more, and are they going to eat that cost or pass it on to the customer? But SLB is one. I should disclose I do have a position in this myself, but the field services area. We were talking about OIH as an example, and of course SLB looks very similar to OIH. It's a big component in there along with Halliburton. But what's your take on oil and gas right now? I mean, you've got the drillers that are looking a little bit better, field services that's been moving up. Is it time to give these another look?
I think so for sure, and I this is definitely on the list. I was considering getting into today, uh, and because it's a larger cap oil stock. It's on the verge of breaking out. Now I'm not expecting that much out of it because it's just a little bit of a slower mover.
Yeah.
But it seems, but these are, this is right at the, it's on the verge of breaking out where a number of other oil stocks still have a little bit more base building to do. So it's interesting that you're in it already. Doesn't surprise me, and because it is kind of at the top of the list if you're looking to broaden out and say, hey, I need an oil stock. What's one that I can just get some exposure to? So
Right.
I think this is acting pretty well. Breaking out that cup with handle. There's some pretty good O'Neill ratings going on, and unlike the Boeing, this has some pretty good earnings and sales, right?
Mm.
So much steadier, and well, it kind of surprises me. We were talking about earnings stability a little bit earlier. Earnings stability is 44 here, so it's a little bit more volatile than some of the other ones. But overall, this is one that has a chance.
Yeah, but I feel like you kind of expect that with the oil and gas
That's
area.
true. That's true.
You might get some earnings stability in the short term. Like the last few quarters, you see some
Yeah.
great earnings numbers here for SLB. But that earnings stability factor is usually looking at a 3-year or 5-year time frame, and it's really tough for the oil and gas stocks
That's
to get
true. It just
earnings
takes
stability
a
over
few
that time.
quarters, and that stability is
Yeah,
going to
yeah,
rocket
exactly.
up.
Yeah. We'll give you 4 quarters maybe, and then and then we'll just go the other way. Let's go ahead and close this out and put in a financial IBKR, Interactive Brokers. It seems like when Charles Schwab had such a devastating move down, and it was kind of like, what was going on here, because it kind of had that bank exposure, so it came down with the regional banks. But its last earnings report, really kind of brought it back to life. And it seems like that's helped a lot of the other financials as well. We've seen the Russell 2000, that's been looking a little bit better, I think, because the regional banks aren't putting that pressure on the Russell 2000 like they were. But go ahead and give me your thoughts on Interactive Brokers.
Now, yeah, if you're looking for a stock in the financial group that has some growth to it, Interactive Brokers it has always been one that kind of comes through the screens, and so it is setting up here. I think this has a chance. They're always been one of the kind of the innovative players within this field. Honestly, and it's done well. It's done pretty well over the last couple of years. It's had some moments here while I guess really kind of just building the right hand sides of bases here. I was kind of surprised just looking at the weekly chart that how flat it was. I expected to have for it to be trending a little bit better, but it is kind of trending right up to near the top of its all-time highs. And I just switched over to the monthly chart here, and so it has a chance here. It's actually pretty interesting that it broke out in all-time highs like 5-6 months ago, pulled back. Now it's back right near all-time highs again and almost building a cup pattern right there. So it might be setting up to start going on another trend after spending years building kind of a really large trading range, or that 80 area was really kind of significant resistance.
And you had some experience using their platform, right?
Yes.
You were dealing with an
Yeah.
account there. What did you think of, again, kicking the tires on what they do? How was that for you?
It's a good platform. I mean, we use it for a number of accounts in house, and it's fine. Honestly, I'm not that sophisticated using it, but you
To use
can.
the algos and
I do use. I
everything.
have used the
Okay,
algos.
yeah,
Yeah. So if you have to fill like
a larger
a
order.
bigger position and it might be a little less liquid, you can use some of their algos and just kind of set it and set your price, and it'll slowly just kind of work that trade. So
Mhm.
that stuff works pretty well. But there are a lot of bells and whistles on those platforms. I generally just keep it pretty simple. But it's pretty effective. It's definitely one of the better kind of trading platforms I think out there, in my opinion.
hmm And one last question to just kind of wrap this up with the rotation and everything. Um, Sometimes when you're looking for those stocks that may benefit from a rotation, the ones that are, maybe the next ones to come up, part of the problem is that the relative strength lines don't look as great, right? Because I mean, it's been all about tech. So when you start looking to other areas that have been basing during this time, and the one that I think of all the time is Apple.
Hmm.
The relative strength on Apple in 2004 when it came out of its cup with handle, the relative strength was just dismal, right? Because you had this phenomenal run in 2003 that Apple was basing during, and so it was one of those things where it just, the relative strength was super low, and it, it just wasn't there. And so all the stocks that we just looked at, relative strength, not at highs, stuff like that. Is that a concern, or is that just like, well, look, if you're going to get sector rotation into other things, that's what's going to happen?
Yeah, I mean, it's a little bit of a concern, especially the relative strength line, right? I always look more at the relative strength line than the actual rating.
Yeah.
But what you want to see, and it's funny because it brings me back, Justin, to one of the master's programs. I want to say it was like in 2010 or 2011, where this question of, does the relative strength line have to be at all-time highs when the stock is breaking out? And
hmm
Bill said no. It's like, what are you talking about? It doesn't. And I remember like thinking, what does Bill talk about? You're always generally using the relative strength line as a confirming or leading indicator, but definitely confirming. You want to see it going or not necessarily all time, but 52-week highs at least, right?
Yeah.
But he said, and I think we were looking at AutoZone back then, Justin, and
Oh, yeah.
AutoZone was kind of, and Bill, and you would know, Bill, I think had a position in it, a pretty decent sized position, and he was highlighting that relative strength line. He said, and one thing you said was, it just needs to go into higher highs, right? It has to
Mm.
take out just short-term highs. So when it's going up, you just want to see it getting a little bit stronger and stronger. And I remember just like, I mean, had never heard that before. And it kind of threw everyone off because
Yeah.
everyone was asking that for AutoZone because it was so much slower than everything else. So it looked like it was lagging. But when you're looking at it on a relative basis there, Bill was saying that the relative strength line was actually showing strength.
Well, and it took a while there
Yeah.
because when AutoZone came out in 2010, the relative strength rating, if I'm not mistaken, I think it was in the 20s. It
Yeah,
was
and
it
you
was
can
it
see
was
on the
that
line right
bad.
here too.
It was
Yeah.
that bad. And
Yeah.
but here again, what happened was you had a a strong bounce by so many stocks in 2009. All these, remember Ford, Citigroup, all these were trading in the single digits, and like $1, and they traded $5. Well, that's a 400% move. AutoZone was doing this very shallow saucer with handle during that time, and then it came out, and Bill was also, I mean, look, he was looking at the fundamental story here. You had all of these people that were dealing with a potential recession and a tough environment in the jobs market, were they going out and buying new cars? No, they were slapping band-aids on their old ones. And you had, at that point, you had so many more, that the age of cars at that time was like 11 or 12 years, the average on the road. And so, yeah, AutoZone is one of those that does tend to do well in recessionary times, as people, fix up their cars as opposed to buy new ones. And he certainly nailed that one right. And again, it was like watching paint dry in terms of the move, but it just was so steady. And then,
I mean, you can see how phenomenal the move is after. It's unbelievable, right?
But you look at it on a daily, and it was like, this just doesn't go anywhere.
Right.
You have to look at it long term.
Look at the relative strength line too, right? So when it was building its handle, the relative strength line was actually taking out short-term highs.
Yeah.
So so I guess that's what he was really looking at, because everyone was kind of confused, including myself. They're like, look, it's so far off its 52-week highs, but he was like, no, what are you talking about? Look at it's taking out short-term highs. And the whole crowd was kind of just stunned at that, because we hadn't heard of that, looked at that situation before. And here's Bill with a nice position in AutoZone, and obviously he made the right call.
Yeah. So, well, hey, look, that's going to wrap it up for us this week. Thanks so much, everyone, for tuning in, and I hope you enjoyed the story from Tom and Tommy. And next week we're going to have Jason Shapiro on. I think this is his first time on, if I'm not mistaken. Irusha, you'll know better than I. So yeah, it'll be great to talk with him, get his thoughts. So we hope you tune in for that. Until then, we'll see you next time.